Hi, this is Joe Rabel. Wanted to follow up with you on the S&P chart, give some more analysis on the different trends and the way things are developing now. It's getting very interesting. I've been providing technical stock research to institutional money managers like mutual funds and hedge funds, independent money managers for the past 30 years. And I pride myself on knowing trend, being an expert on trend as well as momentum. But another factor that I think is very, very helpful is learning how to be a contrarian. You want to be able to take the factors with respect to trend and momentum and look for opportunities where maybe everyone is on one side or the other and see if you can't take the other side of that trade. So I'm going to go into that a little bit in depth and kind of give my reasoning for why I don't think the market is getting ready to crash or collapse or what I'm seeing a lot of people talking about out there. So let's go into the charts and let's see if we can take a look at the monthly chart to start. And I always start with the higher time frame and I'll work my way down to the hourly. I'm going to go through this quick. A lot of these have been, we've been looking at sort of the same trends, but I do want to show you a few things that I haven't shown you with respect to volatility. And I also want to show you how I look at three trends at one time without, on one chart. So let's just take a look at the monthly. It's obviously rallying off support and come back into this resistance zone right around the 18-month moving average. And it also is in the area that we've been discussing, up in this range, essentially 3,000, but it's more like 2950 to 3050, something like that. And I've had this zone sort of outlined for a while. Let's just look at, I want to go to the weekly chart. And I want to make sure we follow up on this because I had mentioned in prior videos that I always draw the fib lines as we're coming back up. And I've got this fib retracement tool showing that we blew through the 38% retracement and then we actually pushed through the 50% retracement. And now we got up to the 61%. And what I've said in the prior videos is that if you don't turn at the 38%, and if you don't turn at the 50%, the odds are pretty high that you're going to at least hesitate, pull back, consolidate, or reverse at the 61%. So we're trying to do that right now. The only thing I'll say is that I've studied this fib stuff for a long time. The 50% retracement mark is incredibly important. When you push through the 50% to the upside, it shows a loss of momentum to the downside. So if the trend is to the downside and you're retracing back up, if you make it through the 50% retracement, you've really lost some downside momentum. It doesn't mean that you can't go down and really get hit hard to the downside. It's very possible that could happen, but I think the odds are low just based on the way this is played out. Odds are actually higher that we're going to come down towards the 38% retracement. I would say somewhere between, somewhere in the area of 2,500 to 2,600, maybe 2,650, and start to find support, at least initially, and maybe even form a little bit of a trading range between the 62% and the 38%. So let's talk about the daily now. And if you look at what's taking place here, you've come into the zone between the 18 and the 40. Now the 18 is above the 40 to the upside, and we're pulling back for the first time inside this zone. So this is the counter trend play that we talk about, because again, let's go back and look at the weekly. The weekly trend is bearish. You have the 18 below the 40, and then on a daily chart, the 18 is above the 40, and we're coming into the zone. Now, what I've talked about in past videos, and this is a pattern that I look for, is we come out of the zone to the upside and then fail. It would be a buy signal that fails. Okay, that would be coming into this zone and then coming out, because if you think about it, 18 crosses above the 40. This is a crossover to the upside. It's supposed to be bullish. So we should be getting a buy signal here. But if it comes up and it can't take out this prior peak and it reverses back down, then you have to assume that the buy signal is failing. I only look for this failure pattern when when the weekly chart or the higher time frame is bearish. So I hope this is making sense to you. I'm trying to come back with this same pattern over and over again, because I think if you learn this one pattern, it'll help your timing and it'll help you understand really what's taking place. Now, if we zero in on the hourly chart, I outlined this trend line before. I pointed out that what we wanted to see was a break of the trend line and then a rally back up to the zone around the 18 and the 40. So we're getting close. I mean, we're actually there. I've already framed out this trade once again. And again, sometimes trading is more about patience than anything. You're not necessarily trying to make a big market call. You're sitting back and you're waiting for the market to put you in. And in this case, if you go back to the prior time, you broke the trend line and then it never triggered you in. And, you know, so I'm a big believer, if you go down to a smaller time frame, wait for the trigger to kick you in. So again, what we're kind of looking for is something along the lines of coming up and then, you know, working our way down and taking out this low. Now, you know, the ADX pattern is actually doing, I like what I'm seeing so far. And again, the only thing I'm hoping for here is that as we pull in, I want to see this hold 25 during this period. I don't really want to see this drop down under and cross back down below the green DI. If we see that, it's gonna weaken the pattern a little bit. And I think if sellers are really serious here, I mean, if we're getting ready for a directional move to the downside, we should see sellers be very serious. And that would mean the DI line on the hourly holding the 25 level. So that's kind of how I'm seeing this. One of the things I want to point out and make sure you understand, and I just switched this to the daily, and what I've done on this daily chart is, one of the things I like about Omni Broker is that it allows me to put in moving averages from other time frames. So if you notice, this blue line, which is a jagged kind of stair-stepping line, is actually the 18-week moving average transposed onto the daily chart. And then this red line is the monthly 18. And notice what's taking place. So I've got 3 different time frames, all moving at the same time, all showing on the same chart, I mean. And the weekly trend is down. The monthly trend is more neutral, but we've spent a long time rallying back up to this line. And for the first time, we've got kind of a flat line on a monthly chart, and we're underneath it. And the only thing that's really missing is for the 18 MA to be broken. If we break that trend and roll it down, now all of a sudden we have the weekly trend down, we're below the monthly trend, and then we'll be below the daily trend. If we can actually make a little rally and then turn back down, we'll have all 3 of these time frames back in sync again for the first time, you know, in about a month or 2. So I think this is a very, very simple way to sort of define the trends and look for a new trigger to develop. As far as the volatility is concerned, what I've got down here is the average true range indicator. And this shows where it basically measures volatility. And so I've got the S&P chart, and I'm going to try and make this a little clearer. If you look at what's taken place during this period, we had a declining volatility situation taking place pretty much going into the end of the year and into the beginning of this year. And what happened was we broke that trend and the volatility started to increase. Now, when you increase volatility, that means that, you know, that to me, that's a risk factor. And it's kind of like, I know a lot of people look at the VIX, the VXX or the VIX indicator. And when the VIX is going up, it's a sign of increased volatility, and it's a huge risk factor. And when the volatility is going up, there's a higher likelihood that you've got risk in the market. Because when the volatility is very low, it's more of a complacent market. People are not really looking to be sellers, but when sellers show up, it usually increases volatility. So it's kind of an important thing to keep an eye out on. And you know, one of the things I wanted to point out is that, you know, this ADX line, this ATR line, this average true range line, was moving up, and then it pulled back to its moving average here and started to move higher. And if we go back to actually the peak in the market, that took place right as the average true range was pulling back to its own moving average. And I thought that was a very, very negative sign when it developed. If you look at what's taking place right now, we don't really have that same situation. I mean, volatility is still sort of declining here, and it's still below its moving average. We just don't have the same type of risk measures based on volatility that we had at the peak. And you can see even during this decline, the ATR was rising all the way through, and right now that line is declining. So we really need to see this reverse before we can expect any kind of a massive move to the downside. Now, when it comes to being a contrarian, I think one thing you want to be on the lookout for is headlines that are out there. And I think that, I don't see a lot of bullish headlines. I see a lot of bearish ones. And then if we go look at the sentiment numbers, this is the difference between the black line here is the difference between the bullish advisors and the bearish advisors. This is from Investors Intelligence. These guys have been around forever. I've been following this indicator for 25 to 30 years. And it's an excellent tool for when there are more bears than bulls. You really need to be on the lookout for some type of reversal, which is obviously what has taken place right now. And I think this is what I was kind of pointing out. You want to be a contrarian. I mean, right now, the sentiment numbers are kind of in the middle. You're coming off of a deep oversold reading in terms of a deep bearish reading, and now we're starting to move back up. We haven't gotten to the point where we've gotten a bullish signal, so bullish, where people have gotten too bullish, and it's a new sell signal has developed. I think that would be kind of the thing we'd want to be on the lookout for. But all I can tell you is the odds of a crash, normally, so the decline in the market, this decline that we saw here on the monthly chart, which is pretty easy to see on the monthly, that big drop, that essentially was a crash. And I think it's very rare, historically speaking, to have back-to-back crashes in the market. We had one crash take place, and we got very bearish as we look at what take place based on the sentiment numbers. And so if we're looking at a rally here and the fact that it was very sharp, I think the odds of a retrace all the way back down, like going all the way down in a straight line, in a crash type of formation, I think is pretty small. Now, maybe down the road, maybe we consolidate a little bit, move sideways and weaken the pattern, and then we can go through these support levels. I'm not saying that's not possible. I'm just saying right now, I think it's very unlikely that we make a big move to the downside. So anyway, I think the play is to look for a directional move to the downside. But we want to be on the lookout for where levels are, 2,600, 2,500. That would be kind of where I'd be on the lookout for this trade to the downside. So anyway, I hope this was helpful. Please subscribe if you like the content, and we'll talk to you soon.